Everyone wants the next big investment. The stock that's going to double overnight. The cryptocurrency that will create overnight millionaires. The startup that nobody has heard of yet. People spend hours searching for the next hidden opportunity. But here's something strange. Most millionaires aren't looking for exciting investments at all. In fact, many of them deliberately choose investments that most people would call boring. Index funds, rental properties, dividend-paying companies, businesses with steady cash flow. These aren't the kinds of investments that dominate social media. They're not flashy. They're not exciting. And that's exactly why they work. The average investor is addicted to excitement. Every day they check stock prices. They watch financial news. They panic when the market drops. They celebrate when it rises. Their emotions control every financial decision they make. Millionaires operate differently. They understand one simple truth. Excitement is usually expensive. The more exciting an investment feels, the more people rush into it. As demand increases, prices often become disconnected from reality. People stop asking whether something is actually valuable. Instead, they buy because everyone else is buying. History has repeated this pattern over and over again. The dot-com bubble, the housing bubble, cryptocurrency manias, meme stocks. Each time, millions of people convince themselves that this time will be different. And each time, many learn the same painful lesson. Buying what everyone else is excited about usually means you're already late. The wealthy know something else. Making money slowly is surprisingly predictable. Imagine two investors. The first spends every day chasing the newest trend, buying, selling, switching strategies every month. The second simply invests in a diversified portfolio every month for 30 years. No excitement, no panic, no headlines, just consistency. Most people assume the first investor wins. But history shows the second investor often comes out far ahead, not because they were smarter, because they stayed invested. One of the greatest advantages wealthy people have isn't better information. It's patience. Patience is incredibly rare today. People expect results immediately. If an investment doesn't double in 6 months, they think it has failed. If a business doesn't become profitable in a year, they quit. If their savings grow slowly, they lose interest. Millionaires understand that wealth compounds quietly. For years, it barely seems noticeable. Then suddenly the growth accelerates. This is why Warren Buffett accumulated most of his fortune later in life. Not because he suddenly became a better investor, but because decades of compound growth finally reached incredible levels. Compound interest rewards time more than talent. Another reason boring investments work is because they're easier to stick with. Imagine owning part of hundreds of successful companies through a low-cost index fund. You don't need to predict which company will dominate the future. You simply allow the economy to grow over time. It's not exciting, but it removes emotion from investing. Emotion destroys more wealth than market crashes ever do. Fear causes people to sell during downturns. Greed causes them to buy during bubbles. Boring investors avoid both mistakes because they already have a plan. The wealthy also understand that investing isn't supposed to entertain you. Your investments aren't Netflix. They're not social media. Their purpose isn't excitement. Their purpose is building freedom. Many people mistake activity for progress. They believe making more trades means making more money. But often the opposite is true. Every unnecessary decision creates another opportunity to make a mistake. Sometimes the smartest financial move is doing absolutely nothing. That sounds almost too simple. But simplicity is incredibly powerful. The greatest businesses in history weren't built overnight. Neither were the greatest investment portfolios. They were built patiently, one decision at a time. Another overlooked reason the rich love boring investments is because boring investments are often understandable. If you can't explain how an investment makes money in one sentence, you probably shouldn't invest in it. Yet millions of people buy assets they don't understand simply because someone online promised huge returns. Millionaires rarely do this. They invest in businesses that sell products, real estate that generates rent, companies that produce profits, assets with real value, not hype. One of the biggest myths in finance is that higher risk automatically means higher returns. In reality, unnecessary risk often leads to unnecessary losses. The goal isn't taking the biggest risk. The goal is taking intelligent risks with favorable odds. Professional investors spend more time avoiding bad investments than searching for magical ones, because avoiding huge losses is just as important as making gains. Imagine climbing a mountain. You don't reach the top by sprinting. You reach it through thousands of steady steps. Wealth works the same way. Every month you invest, every unnecessary purchase you avoid, every skill you learn, every financial mistake you don't repeat. These boring decisions eventually become extraordinary results. The world celebrates overnight success, but overnight success usually has 10 or 20 years hiding behind it. The millionaire you admire probably spent decades making decisions nobody noticed, investing consistently, living below their means, ignoring trends, staying patient while everyone else chased shortcuts. And that's the biggest secret of all. The rich don't become wealthy because they constantly find extraordinary opportunities. They become wealthy because they consistently avoid ordinary mistakes. The next time you're tempted by an investment that promises incredible returns overnight, remember this. The investments most people ignore are often the ones that quietly build the greatest fortunes. Because in the world of money, boring is often beautiful.